This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios, and it's a Friday. Well, yes. I think that's one of the things which stands out as a highlight. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, morning. Good morning. How our moods change, right, when it's the weekend upon us? I mean, this, like, what does it mean? Do we enjoy coming here or not?
That seems like a deep philosophical question. What does it all mean?
A question for another day, right, perhaps. But yeah, I mean, it is Friday and all cheers everywhere.
Yeah, but we have plenty of cues with regard to market cues as well. And we get into the weekend and then we have India kick-starting our World Cup campaign. Yes. So plenty to look forward to, but let's get through this day first.
So let's start. And it's not a bad kind of way to start the day, right? It's an important day. And I think I want to start by saying that, especially because of two reasons. One, of course, the way the market's been traded, it's a little tentative, but because of data. I mean, there is the RBI policy today. The decision will come out, the MPC here in India. And then later tonight, you have the US jobs data. With the monthly jobs data. So both are, I mean, important. One is important, especially for, liquidity in the system, rates, etc. here in India. The other one is important for that global risk-free rate, which is the US 10-year, which has been basically the focus for the last fortnight or so. The relentless rise there, backed by consensus pivoting to the fact that maybe, the economy is still strong, so rates need to be higher for longer. This is, in that sense, the decider data because, over the last couple of days, we had the jobless claims, we've had Jolt's number, we got some weak data as well, but this is more steady and a monthly data point, which will, I think, decide on that. But that's only later today. Now, equities overnight ended absolutely flat. The Nasdaq was down about 0.12%. The pullback, and I would say it's a tactical pullback because, and why not? We put that data out basically saying that after very sharp spikes in 7 instances over the last 20 years, you see pullbacks. So that is underway, but very small still. So both the bond yields and dollar actually came off a little bit. So the 10-year came off about 2 basis points, nothing. 4.71. The dollar index came off a little bit more, about 0.4% or so to 106.37. The reason I'm saying it's tactical is because if you look at the data, which is the jobless claims number, weekly number, that actually was not strong or anything. It came in low, which means that the labor market is strong. So that is not what fed into yields in that sense. There was some Fed speak as well, but at the margin. Didn't make that much of a difference. Now, oil is the other one, which also continues to weaken, thankfully. So you've got the Brent oil sort of price, which now stands at about 84.18 at this point in time. So, from 97, closer to 3 digits, down to 84, I think that's a absolutely big deal. Tonight, we get the jobs number, and, it needs to hit the sweet spot. The labor market data. It needs to be neither too hot, neither too cold. It needs to be not strong, not too weak. It's a tall ask, but that's basically what we are aiming for. Because if it's hot, once again, it will give credence to the fact that interest rates need to be not just higher for longer, but at a higher level for longer. And that's not something we need. In any case, we'll only be sort of privy to all this information when we come back to trade on Monday morning. So where does all of this leave us in terms of levels? The Nifty ended in the way it started. We started with a 100-point rally. Mid-session, it added another 40, 50 points. But by close, you had 100 points to show for it. So that's the Nifty for you. Resistance for the Nifty comes in at 19,605. Basically, the 19,600 level around where the markets kind of found support earlier, that becomes a bit of a resistance. That's 50 points away. And then the bigger number is that swing high, which we put out yesterday as well, which is 19,726. That's the more important number. Near-term support for the Nifty comes in at 19,443. On the Bank Nifty, yesterday's high coincided with the 78% retracement of the August to September rally, which is that number, 44,376. So that's the first resistance that the Nifty Bank needs to sort of cross. And support for the Nifty Bank comes in at about 43,830. which is basically the 1st of September low, which was respected, which we got to almost within 20 points day before yesterday, but which is still held on. So hopefully that doesn't come into the contention, at least not today. GIFT Nifty will come up on your screen. RBI policy days, usually post RBI policy, we've tended to see moves depending on what's said and what's done. So I think, of course, the first 1.5 hours, 11 o'clock is the policy. I mean, you just need to, 10 o'clock, I'm sorry. So you just need to kind of at least wait for the first hour before you decide what one wants to do. In any case, I would say wait the entire day. Wait till you get the data out of the US out of the way, etc. Because Monday could look very different depending on that one data point. And that will have a lot of influence on global rates, etc. Sonia.
I love how you described the jobs data, right? Not too hot, not too cold, not too strong, not too weak. Sounded like my coffee, you know? And that's the way I like my coffee. So is that how the jobs data should be?
I mean, sweet spot, right?
Fine, that's sweet spot. But I mean, for the market, right? I like the way yesterday panned out because we saw a good recovery. And by the end of trade, one thing is for sure, that the market is very resilient. Despite all the global cues, the Nifty held fort around that 19,500 level. So that's a good thing for the bulls. There was L&T, ICICI Bank, Infosys. So a lot of heavyweights really made sure that the market got back to that 19,500 mark yesterday. The good part also is that although there is FI selling, it's been a pretty long streak of FIs selling in this market. The selling has reduced substantially. So just look at the numbers over the last many days. On the 28th of September, the selling was over 3,300 crores. On October 4th, it was 4,400 crores. But yesterday, it was the lowest that we've seen in the last many days. So FI selling has definitely reduced. The RBI policy, I don't think it's going to move the needle of the market too much. It's expected to be a status quo policy. Yes, there would be some macro data discussed, but from a market standpoint, I don't think too much, of the markets would move because of it. The other thing to watch is what's happening with oil prices. The slide that we've seen has further extended. So Brent crude is now at $84 a barrel. So keep an eye out on that. And the US markets, yes, the jobs report is important, but the US markets were largely flat. You saw buying coming in from domestic institutions in our own markets as well. Lots of positives coming in from business updates, whether it is in the banking space, whether it's in the auto space. Tata Motors had a good business update that they came out with. Some of these companies like Nykaa, Kalyan Jewelers have come out with their updates as well. We'll talk about that in greater detail. But give and take everything, this is a market that's strong. I mean, it's holding at 19,500, and the bulls would definitely like that. Today, once the RBI policy moves out of the way, perhaps the next leg would shape up.
Well, that's right, Sonia. We have two big cues, right? The domestic cue is going to be the RBI governor, and the global cue is going to be the jobs report. And I think both these cues put it together, give it 100 points each. Maybe you see a swing of closer on 200 points on Monday itself, Monday, Tuesday itself. So we're bracing for a move either towards 19,750 or to the downside, it could be 19,300 odd. How is trade set up? Yes, it was a good relief rally. The problem is resistance levels stay intact. The next point is the fall in crude oil prices. It's been perfect. It's been timed perfectly from an Indian bullish perspective. Because imagine the RBI governor speaking when crude oil prices are at $95 per barrel. Today he's going to be speaking with Brent crude prices at sub $85 per barrel. So obviously it gives you some bit of comfort. And the Nifty Bank is going to be the index in focus. That's been the underperformer for the last few sessions. The positioning is net short over there. So the last thing you want is to hear a hawkish-sounding RBI governor. If that doesn't happen, if he says pretty much what is expected, I think the Nifty Bank could be the one that could come in for a bit of a short covering bounce, provided there's no negative surprise. How is positioning then? Well, yesterday we saw some first signs of some short covering on the Nifty Bank because it ended higher and the open interest was lower. The FI data as well perfectly ties in out there. There was mild short covering, 2,000 contracts lower on the short side. They continue to remain net short, though, with the positioning at around 74%. And in absolute terms, it's nearly around 88,000 contracts. Which brings us to the options data then. 19,500 put, fairly active in trade. 19,600 call as well, fairly active in trade. Premium on both of them, closer around 80 points. So for those that are writing, that 19,500 put, as a graphic plate is telling you, the premium was around 80 rupees. You deduct 80 rupees from there. On the downside, first support, 19,420. On the upside, though, the first resistance zone comes in at around 19,610. And then since we saw a fair bit of addition at around 19,600 call, well, 19,670 becomes a bit of a resistance zone. But the Nifty Bank is going to be the key focus today. And yesterday we saw 44,400 call, had a fair bit of open interest build up. The premium out there is nearly around 200 rupees. So the resistance level is at around 44,600. The 100 DMA as well comes in out there. And going by the options data as well, the recent low will become a bit of a support zone. If somehow the Nifty bank can get towards those resistance zone, that's going to be the index to track. For starters, we start off in the green. First couple of sessions, we move more or less, for first couple of hours, we move sideways, and then we take it from there.
Okay, and lots of individual stocks in focus. So many business updates coming through. So we'll pass through them and tell you the good from the bad in a while. But first up, we have a cue coming in from Pankaj Chaucharia of Antique Stock Broking, a view that is. He says that overall, given the expectations of a capex cycle recovery, he continues to prefer industrials, real estate, cement and PSU banks. He says the FY23 Nifty 50 earnings currently stands at 809 rupees. FY24 at 962 and FY25 at 1100. He says their March 2024 Nifty 50 target stands at 20,800 based on 19 times FY25 EPS of 1106. High global yields and crude oil prices are key near-term risks. Pankaj says stocks that could post a positive surprise include SBI, ITC, GAIL, Kirloskar Oil, Cummins, Alchem, Lupin, Prestige, Brigade, Soba, Voltas, JSPL, NCC, Shree Cement, JK Lakshmi Cement, SBI Life, Max Financial and PTC. While stocks that could post a negative surprise include Tech Mahindra, Asian Paints, Gujarat Gas, Dr. Reddy's, Oberoi Realty, NMDC, Ashoka Buildcon, Rallis India, Torrent Power and Indian Hotels.
Okay, well, let's get you some money market views. On the rupee, we've got Lakshmanan V of Federal Bank, who says that the US 10-year yield cooling off from 16-year high levels and a sharp fall in crude prices assisted the rupee from breaching all-time lows. Yesterday, the rupee traded in a very narrow range. This week, ahead of RBI, MPC and non-farm payrolls data due later today. He expects that INR to trade in the range of between 82.88 to 83.48 to a dollar for the next few trading sessions.
All right, and on the bonds, Lakshmanan V of Federal Bank says bond yields cooled off from highs, tracking a fall in crude and US yields. Markets seem cautious ahead of the RBI MPC. He expects the Indian 10-year benchmark bond yield to trade in a range of 7.15 to 7.3% in the coming sessions.
Okay, well, Rana Gupta is now joining us with some perspective. Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thank you very much. I mean, I think the last time we spoke, you were kind of alluding to the fact that at the margin, there seems to be, on the flow side, it's a bit of a negative skew, especially into emerging markets, etc. We've been looking at the daily FII number, and it's kind of now adding up to a sizable net sell number. What's the sort of overall sense when you talk to your peers from a foreign investor community perspective? What's the feedback now for a market like India?
In the short term, whatever outflows that you see, a lot of this is also going to be positioning led, because what's going on in the global and the macro market is quite unprecedented, right? Because the 10-year yield went to 4.7, 4 in no time, crude oil was 95, so on and so forth. So I think based on the volatilities, positioning-wise, these flows will, correct their position, and time to time there will be outflows. But if I think about, based on, medium to long-term view, we do see a lot of interest in Indian equity markets and within emerging market space. And that's largely due to the India story, which we have discussed several times, which is underpinned by the macro stability and the earning growth that's going to pick up. So I think a lot of quite a bit of money is still in the sidelines, and that's going to, I think, that declines at reasonable valuation, that money is going to come in. And I think that's been the trend. If you look at Nifty over last about 1.5 to 2 years, it kind of consolidates in a narrow band, right? It was previously consolidating between 16,500 to 18,500 between 21 and 22. Breaks out 18,500 to 20,000. Now I think it can remain in that band for some time, consolidate, before, let's say, moving up sometime, let's say, early or middle of next year.
So what do you feel about where India could head from here? I mean, you said that India is one of the most preferred markets at the moment, but we're almost sitting at, all-time highs. We're not too far away from the 20,000 mark. You think we could spend some time around these levels before the next leg up? And if yes, what's the best strategy to adopt now for retail investors?
Well, certainly we can spend some time in this 18,500 to 20,000 zone. I think we we've been in this zone for some time, and we can be here for, let's say, 2 more quarters, and that's my guess. But we can spend some time here. But I think the point is that market may look to be near all-time high, but the way to look at equity markets is to look at valuation. In fact, I would argue Indian stock market valuation is not that high relative to its own history. The market is trading at only about 5-7% higher than its own mean, which is not too high. In fact, after a while, even the large cap stocks like the autos and the banks, they're looking pretty reasonably valued considering the earning growth from which they hold out. So I think the idea will be to use this consolidation opportunity to kind of look at those sectors where you get good growth at reasonable prices. And even in the large cap space now, I think auto and bank is now offering pretty good growth and valuation trade-off.
Hi, Rana. Good morning. Rana, I wanted to ask you about this outflows that we're seeing from FIs. It doesn't appear like it's an India-specific problem because from emerging markets itself in the month of September, we did see outflows. You wouldn't be worried that in the near term there are some outflows then, given that sort of a backdrop?
No, that's true. I think this outflow that you're seeing is not India specific. This is more of an emerging market kind of position, kind of a thing. And when the US bond yield goes up and something happens globally, that is always an issue. The good thing is that for Indian markets, we have while the emerging market and all those funds, if outflow can happen, the good thing is that there are two sources of support in terms of liquidity flow for Indian markets. Number one has to be said about the domestic flows. We have observed that domestic flows have remained strong, and whenever the valuation kind of corrects to mean, I think the domestic flow tends to pick up quite a bit. So I think that is one factor. Secondly, if you look at all the emerging market or even the FI portfolios, I think India would be equal weight to slightly overweight, but I think our understanding is that people want to have a much higher position than that. So that money, which has to come in this quite a bit, because I mentioned earlier during this interaction, that India is one of the most preferred market, but I don't think that's adequately reflected in everyone's positioning.
All right. Okay, Rana, we leave it at that. Thanks a lot for joining in and, speaking to CNBC-TV18. So India continues to be a preferred market for global investors. But today is a big day. The CNBC-TV18 poll showed that the market today is not expecting a rate hike or a change in stance when it comes to the RBI policy. Then what is it that we should watch out for? Lata is here with the editor's take. Lata, from a market standpoint, is there anything that can move the needle?
Well, in the first place, the market is so completely on the side of no action policy. It is not just that they have voted by a majority. Unanimously, our poll said no action. The Citizens MPC, which we conduct, also said no action, no change in the stance largely. But the market is still worrying. How will Reserve Bank indicate that they are worried about the global ambience? See, the MPC is set, the repo rate is set on domestic factors, but there is an ambience of high rates. And when the dollar rates and the rupee rate narrows too much, there are people who will prefer the dollar because it's a risk-free return of 5%. So the rupee rate has to be much more for it to remain attractive. And therefore, will they do something to push up the near-term rates, keep the call rates higher? So there are all kinds of guesses. And let me warn you, these are just guesses. Will they raise the repo rate by 10 basis so that it is effective but not material? Will they do some diluted kind of CRR like they did the ICRR in the previous one? Or will they just raise risk weights on, say, luxury home loans? Let me repeat, all this is just dealer thinking aloud, no source-based info here. They're just wondering how will RBI communicate. But my sense is it's quite possible RBI will simply communicate with its words. They are very good at using the appropriate language, and they may just stick to effective communication to say that this far, no change, but expect anything, anytime if the circumstance. It's quite possible they'll just do that. And the big thing to watch will be the FY25 inflation forecast. You will get for all the 4 quarters. At the moment, we're only for 1 quarter, April, May, June. We will get the remaining 3 quarters. And if that is nowhere near that 4.5% mark on an average, then the market will push back rate cut expectations. If the average is closer to 4.5 or even lower than 4.5, then the market will start expecting that sometime next year, mid next year, there'll be rate cuts. So that would be an important point to watch. And finally, you have to watch out, of course, for the Q&A, because anything can come up in the Q&A. Remember, for the first time, a fintech has got a banking license. Of course, it's indirect. They've been allowed to take over, Slice has been allowed to take over the Northeastern Small Finance Bank. But, there can be questions like that. Credit cards, fintechs, you name it. So that's going to be interesting. And, for banks, it's material.
Absolutely. Lata, thank you very much for that editor's take. So, all that you need to know on the RBI monetary policy before and after. So stay tuned right here on CNBC TV18 for, extensive coverage, which we will continue to get to you. We'll take a very quick commercial break here. Our list of top stocks to watch out for coming up on the other side with our research team. Stay with us.
Welcome back. There are plenty of stocks to focus on this morning, so let's get straight to it. First up, I'm looking at Tata Motors and going with green on that because the Q2 update that the company posted was very strong for Jaguar Land Rover. Both the wholesale and the retail numbers have grown at a fast pace. So there is a retail growth of 21%, a wholesale growth of 29% that we're looking at for Tata Motors. More importantly, the balance sheet continues to be very strong. So they have guided for a free cash flow of £300 million for this particular quarter. That's Q2. Apart from that, they say that the order book remains very strong at 168,000 units. And finally, Morgan Stanley put out a report. Several brokerages actually have positive updates, but I'm picking out Morgan Stanley from the list. They have a target price of 711. They have an overweight. They like the numbers this time, and the target price is well above the current market price. So I'm going with green over there.
Okay, all right. Going with green on Tata Motors. Let's hop across to Abhishek, who's joining us to tell us about Bajaj Finance. They announced their big fundraising plans. Morning, Abhishek.
Morning, Nigel. So, Bajaj Finance has taken a board approval to raise about 10,000 crore. This will be in two tranches. One is the QIP, which will be about 8,800 crore at CMP. If you take into account the calculations, it suggests that book value will increase by 14%. to about rupees 1,025 per share. Equity dilution will be just 1.85%, and that will help the Tier 1 ratio improve by almost 4% to around the 27% level. Additionally, the company will issue warrants to Bajaj Finserv and raise about rupees 1,200 crores. So in total, Bajaj Finance is looking to raise about 10,000 crore. Post this 10,000 crore, book value will increase by close to 16% to 1,042 per share. Equity dilution is of 2.1%, and Tier 1 ratio that will increase by almost 27.5%. So when lenders do raise money, it's for two reasons, either for growth or provisions, which we will have to wait and watch. Back to you.
All right, thanks a lot for that. I'm looking at Indigo this morning. The stock was up almost 4% yesterday, but there is news flow that after ATF prices have gone up so much, what Interglobe Aviation has done is introduced a fuel charge to consumers. So now, depending on the distance that you travel, you'll have to pay an additional charge for the fuel. This is purely because ATF prices have gone up so much, and the maximum charge that you will pay based on distance is 1,000 rupees. So if you're traveling a particular distance X, there could be 300 rupees additional charge, and that will go all the way up to a maximum of 1,000 rupees to offset the rising ATF prices. Now, this fuel charge will kick in from the 6th of October 2023. Remember, ATF prices were hiked by 5% in the month of October, and this was the fourth straight increase in ATF prices. So Indigo had to do something. So folks, from today is when fuel charges go up. So if you have not booked your tickets yet for your travel, get ready to pay more.
I went back and looked at in my mailbox tickets which I booked earlier. In 2018, there used to be a charge, and they used to send you this breakup of tickets. There was that fuel surcharge. I mean, it was 300 rupees.
That's because ATF price had gone up a lot at that time.
So it's been kind of reintroduced. Yeah. But if you don't see the breakup, I mean, I think you miss it, right? I mean, you see it, you think flights have gone up because it's peak season, etc. But that's what's happened on Indigo. Well, let's move over. There's Adani Wilmar and Brokerage Consumer, which are in focus. Mangalam is here with details on both. Mangalam, hi.
Hi. So, the second quarter updates coming in thick and fast for the consumer space as well. We have Brokerage Consumer. Looks a little weak. I'll tell you why. Because, the macro conditions and adverse weather conditions impacted demand in India. Consolidated volume growth for the company has been seen in mid-single digits. They've reported double-digit constant currency revenue growth, and that's largely on account of the mid-teens growth that they've seen in their non-India businesses. Year-on-year margin expansion has been healthy. What the street does not like is mid-single-digit volume growth, largely because the previous quarter saw 12% volume growth on a similar basis or a similar base, growing, mid-single-digit in home care volumes and personal care volumes growing in low single-digit is something that the street would be a little worried about. See mild red in Brokerage Consumer because the green part is Indonesia and all the other verticals are doing well.
Okay, all right, Mangalam, thanks for that. Let's hop across to Sudarshan. He's here to tell us about PB Fintech. There's a large trade expected out there. Morning, Sudarshan.
Morning, Nigel. Yes, Policy Bazaar, which is listed as PB Fintech, is likely to see block deals of more than 2.5% equity today. The term sheet that CNBC-TV18 has an access to indicates that SoftBank, which currently holds 4.39% stake, may reduce its holding to less than 2% by selling shares of almost 880 crore. The price range for today's share sale is likely to be in the range of 752 to 767 per share, which at the lower band of 752 will be at a discount of 2% to yesterday's closing price. The last time SoftBank sold shares of PB Fintech was in December 2022 when it sold 5.1% equity to raise 1,045 crore at a price of rupees 455 per share. Since then, PB Fintech stock has been up 70%. Now, after today's block deals, there will be a lock-in period of 60 days if SoftBank plans to sell further stake.
Right, thanks a lot for that. PB Fintech in focus. The other stock we're looking at is Adani Wilmar. Mangalam's here to tell us how the business shaped up this time. Mangalam, over to you.
Well, year-on-year edible prices have come down sharply. So, their overall revenues this time around have declined, but volume growth has been in double digits. If you just take a look at their edible oil, volume growth has been just around 5 odd %, whereas the value decline has been around 19%. Volume drivers this time around have been their food and FMCG business, which have grown at 18% volumes and 25% in revenues. And we've seen rural sales grow faster for Adani Wilmar, unlike all the other FMCG peers, and that's largely because they've increased their distribution out there. The stock is down around 55% from the highs. See a very mild green on that counter. Though for them, the bigger story would be any sort of corporate action taking place with regards to the promoters at some point in time. So that's something that the street will be watching out for too.
Okay, well, the other stock we're looking at, Mangalam, is Nykaa and Kalyan Jewellers. How are the updates this time?
Well, Kalyan Jewellers has been extremely strong, 32% sort of jewellery growth coming in the India business. And this, remember, was a seasonally weak quarter, largely because of the presence of Adhik Maas. And despite that, the company's India business has shown a fair amount of growth. They've opened 13 new stores, and they're likely to open around 33 more stores in India over the next couple of months before Diwali itself. Middle East saw a bit of weakness, but that accounts for just 14% of their sales. So a 4% growth there should not worry the street. The stock has been higher by around 85% this year itself. So see it continue to gain in today's trading session as well. The other one, Nykaa, is showing signs of recovery. If you just take a look at it, their beauty and personal care business has seen a revenue growth of around 20%. Fashion, despite muted sentiment, has seen a growth in early 30s. And as a result of which their overall net sales value has grown in mid-20s, not particularly bad, given the stock price correction and, the outlook for the second half being a lot better.
All right, Mangalam, thanks very much for that. Next is Ujjivan Small Finance Bank and Angel One. Abhishek is here with updates on both. Abhishek, morning.
Morning, Prashant. So to start with Ujjivan Small Finance Bank, there has been robust deposit traction and AUM growth is also pretty strong. So to talk about deposits, they are up 42.8% YOY and about 9.3% quarter on quarter. The CASA ratio has dipped a bit on a sequential basis to 24.05% when compared to 24.6% in the previous quarter. Disbursals are up 18% YOY and about 8.8% quarter on quarter, which has meant that the loan growth is pretty strong at 27% YOY and about 5% sequentially. Asset quality has improved. Gross NPA ratio is down to 2.2% when compared to 2.4% in the previous quarter. Angel One growth has been steady over there in Q2. Client base has grown by 13.3% quarter on quarter. Number of orders is up 36% quarter on quarter. Gross client acquisition is up almost 60% on a sequential basis. So overall, average daily turnover is up 30% quarter on quarter, and their market share that's in equity has improved by 170 basis points. Back to you.
All right, thanks a lot for that. Well, here's a quick recap of our top stocks with positive news flow. There's Tata Motors, Bajaj Finance, Interglobe Aviation, Adani Wilmar, Kalyan Jewellers, Nykaa, PB Fintech, Ujjivan Small Finance Bank and Angel One, while Brokerage Consumers is the only stock on our radar with a negative news flow. Let's take a quick break on that note. On the other side of the break, many questions to ask Ajay Bodke, who will join in for a fundamental stock analysis. Stay tuned.
Welcome back. Well, we'll be hearing from the RBI governor in a few hours from now. But before that, we'll have plenty of stocks that will be moving around. To help us out with some fundamental analysis, Ajay Podke joins us for exactly that. Hi, Ajay. Good morning. Well, let's talk about the big stock, Bajaj Finance. They're looking to raise close to around 8 to around 10,000 crores. Our big fundraising plan out there. How would you view the stock? Valuation-wise, it's never been cheap. But your view on it from here on?
Good morning, Nigel, and thank you for having me. I think the aggressive entry of Reliance in the financial services business clearly sort of, is having its ripple effects. And many NBFCs are trying to fortify their positions. Now, Bajaj Finance obviously is in a pole position. But in my opinion, I think this entry has necessitated to increase to raise capital. The capital raise will be viewed very positively by the market. Because after the capital raise, I think the book value should, in my analysis, go up by between 10 to 13%. The EPS should go up by around 6 to 8%. And the valuations that you spoke about, from 7 times price to book before the raise, it should marginally come down to 6 times price to book. But let's not forget that pre-COVID, the stock used to trade at as high as 8 times price to book. The numbers that were announced a few days back, pre-quarter numbers, continue to show strong momentum, both in terms of client acquisition as well as the AUM growth. So there is no slack out there. So there was a concern a couple of quarters back whether the high base would start impacting the numbers, but that is not evident at all. So in my opinion, I think Bajaj Finance continues to remain the preeminent part of one's portfolio for the medium term.
All right, Ajay, hi, good morning. Very, very strong numbers coming in from Tata Motors in terms of JLR, right? So the wholesale, the retail numbers have grown in excess of 21%. There's a operational free cash flow that they're looking at of 300 million pounds. At this price, I think Tata Motors' stock, last time I saw it, it was around 600 or so. At this price, is the risk reward still favorable for investors?
I believe so, Sonia. Because if you look at the total or the order book that is yet to be taken care of, I think it remains very strong at 1.68 lakh as per the company press release and the fulfillment number. Plus, if you look at the breakup, I think the American economy, which is doing strong, I think there the growth has been around 32% in terms of retail sales for September quarter. The numbers have come down essentially because China has grown only at 7%. Europe, I think, remains in mid-teens. So I think the two strong markets, North America and Europe, continue to fire quite strongly for the company. And the 3 key brands for the company, I think, which constitute 77% of the total order, I think they're the high margin brands. I think if you look at Range Rover Sport and Defender. So in my opinion, I think Tata Motors, plus as you mentioned, a strong 300 million pounds of free cash flow expected for the September quarter. So all in all, I think with the India business also doing well, both in terms of CV as well as the passenger vehicles, not a bad place to be in for at least a 15 to 20% one-year return from here on for Tata Motors.
Very quickly, if you will, Ajay, your thoughts on Angel One, if you cover it.
No, I think, unfortunately, Prashant, I've not covered it, so I'm so sorry about it.
Is a Zomato or a recent listing like RR Kabel? I'm just sort of picking out names which have seen strong momentum recently.
Yeah, I think in that space, I think, I like PB Fintech. I think the company, there is a large block that is expected to happen, I think, today. But then I think that's part of SoftBank's exit strategy. I think 5% they had sold in December, and I think they're following it up with a 2% sale today. But if you look at the last quarter numbers, I think the losses have significantly narrowed down. I believe from as high as 200 crores a year back, I think they've come down to something like 10 or 11%. And the sales, the revenue growth for the last quarter also on a YOY basis are very strong. So I think this sale by SoftBank should be taken as an opportunity by investors to accumulate the stock.
Okay, PB Fintech is Ajay's pick. Ajay, it's a sort of brief chat this morning, but it's a power-packed day. So thank you very much for joining us, and we'll have you back soon again for a more detailed conversation. Anuj is standing by with a quick check on the markets and how he's looking at the setup this morning. Anuj, over to you.
Morning, Prashant. The market showing some signs of bottom. It's a bit of a divine intervention which has helped a market which was almost breaking down over the last 2 days. But you've seen crude prices fall from nearly $100 a barrel to sub $85, and that's really helped our markets, sort of find their feet. Even the U.S. bond yields and dollar index, they have also taken a bit of a breather after that big move. So all of that has helped us. But let's see for how long, because today, of course, there's policy. The Bank Nifty and Nifty both have respected crucial levels. What were those levels? Basically, September lows. That was 19,255 for Nifty and 43,830 for Bank Nifty. Both were defended by a whisker about 2 days back. The real test for the indices, though, would be at the falling 20-day exponential moving average. That's placed at 19,659 on the Nifty and 44,672 on the Bank Nifty. There's RBI policy today, of course, so banks and NBFCs will be in focus. Now, talking about the day trade today, the levels to watch on the Nifty, the first resistance, as I mentioned, 19,576 to 19,600. That's almost yesterday's high zone. And the bigger resistance is 19,659, the 20-day exponential moving average, and 19,675, the options writers zone. On the lower side, the support comes in first at 19,487, which is yesterday's low, and 19,340 options-based support zone. On the Bank Nifty, I think there's no trade till the policy is over. After that, you want to see maybe a level-based trade. Support zone is 43,830 to 44,000, and at higher level, resistance is placed at 44,500 to 44,600. You need to play this range smartly and see if any trade emerges. And to all our viewers and to all of you, happy International Smiles Day.
What is that? International Smiles Day?
Yeah, Smile Day. You just smile and, for no reason and just be happy. Just enjoy your day. It's Friday as well. Enjoy your weekend. Have a smile and be happy.
Actually, on Fridays, we don't need a reason to smile, right?
Every Friday is the International Smile Day.
All right, all smiles to everyone. Thanks, Anush, for bringing a smile on all of our faces. We will take a quick break on that note. On the other side, we'll shift focus to the commodity market. Peter Maguire of Exim Australia will be here with us in the studio to discuss the volatility that we've seen in oil prices and its impact. Stay tuned.
Okay, welcome back. Just 15 minutes to go for the pre-open session. But from stocks, let's move our attention to commodities. And why not, right? I mean, all of the action and what's happening with oil, I think, has made headlines for the last 2 weeks or so. Manisha is here with, of course, all the roundup in terms of what's happening. We also have a special guest in our studios. Peter Maguire is joining us. He's, of course, with Exim Australia. Peter, good to have you with us here in the studios. I'm going to come to you in just a bit. But Manisha, first, you set the context for us. What's the mood like and what's really happening in the commodities market? And start with oil.
Oh, well, absolutely, Prashant. The big profit-taking continues in case of the crude oil prices. We did see 5% of a decline on Wednesday, and overnight has been yet another 2% decline. So for this week now, we are down by 12% in case of crude oil prices. It was only by the end of September that we hit a high of $96 a barrel as well. And from those kind of levels, we've come down to $84 a barrel. So it has been a very strong $12 of a decline as well. The prices are trading at a 5-week lows. There has been a big profit taking by funds. We also have seen a surge in gasoline stocks, the strength in US dollar index. All of that seems to be weighing onto the market. The street will watch out for the U.S. non-farm payroll data that comes in today. That would give you further direction. But the market also will watch out on what Saudi Arabia and Russia do in sense of outputs going forward. It also is going to be about the economic data that we'll see coming out of China and Europe. That would set context for the prices going forward.
Manisha, thanks a lot for that. Well, Peter Maguire is sitting right here with us in the studio. He's the Chief Executive Officer at Exim Australia. Peter, thank you for joining us here in Mumbai. And what brings you here?
Well, Sonia, I'm here. I flew in for a couple of days. I'm probably getting swept up in the excitement as far as the cricket. I leave tomorrow afternoon. I'll be watching the game from Dubai. But I tell you what, it's going to be an exciting 48 hours for the Australians and see how we perform.
So the heart says Australia, but the head is saying,
Well, I think you guys are very hard to beat. But let's just see how New Zealand played. They played incredibly. If the Aussies, or if we can probably take a little bit of that spirit, maybe it could be an interesting game.
And how are you feeling about the commodities market? I mean, oil has been all over the place, but where do you see it stabilise?
Well, I'll tell you what, I think there's probably a little bit further downdraft at the moment, and I wouldn't be surprised. And building on what Manisha said, 12% off in a week has just been electric. Great to short. US dollar index hitting that 107.30. It's given back a little bit of that heat as well. And any market that was parabolic over 100 days as far as move to the upside, it's not unusual to see exhaustion. And that's a technical term. So it gets exhausted to the upside. It takes a little bit of a breather. I think all the heat comes out of it. And that's what we've seen in that quick washout. And I think it'll consolidate around that $80 to $82 level.
What's with the OPEC and all the commentary which has been coming through? This morning, there was a headline which said that they plan to keep these output cuts all the way into 2024, not just till the end of the year. I mean, is OPEC really reasserting its place? What's going on? I mean, what's the...
Well, I think, Prashant, a couple of things. First off, they control, the elephants in the room being Saudi and Russia. They control the flow as far as OPEC, I think. And having been to the meetings, they really are the big elephants. And they probably are looking at where their budgets are. We've got a protracted war situation with Russia and Ukraine that hasn't been put to bed as yet. And that's costing, obviously, big amounts of revenue. And then the Saudis, naturally, they want higher oil prices. That's my understanding as far as from a budget issue as well. So if they roll that into 24, that's not going to be a good sign as far as, I think, inflation. And it's going to be very interesting how central banks play in all of that moving forward.
So I think there's an election in the US next year, right?
November,
usually,
and you guys got one in May.
Yeah, but so usually, historically, the US has been able to lean on the Saudis to keep the price low.
Yeah.
You think that's broken now?
Well, under the previous administration, I know that President Trump had a wonderful relationship with MBS, but that certainly is fractured compared to how the Biden administration are dealing with MBS. So I think it's going to be fascinating how it plays into 24 and, what happens as far as equities, what happens with bond yields and the US dollar index. And I think that if crude prices edge up higher from here, I think that's going to also take up petrodollar. So the US dollar, I think, will strengthen.
All right, Peter, we recently saw $95, $97 per barrel on Brent.
Yeah.
Do you think the peak for the near-term peak has been made? And also, more importantly, our audience will be happy to see the correction that we've seen in Brent, but how much lower can we go from here?
I don't think there's too much more washout. You might get a couple of more bucks, maybe 86, 78 might be, as far as resistance. And no, I think by Christmas you'll see it retest those highs again. Sorry to say, but I really feel as though that there's a groundswell of as far as momentum to the upside.
Okay, all right.
As an investor, someone who's perhaps watching you right now,
sure.
Any other commodities, any precious metals that you track that you think perhaps could be the big theme of next year?
Absolutely gold and silver. I think silver more so than gold, and I feel as though that the ratio is out of whack. So I think there's plenty of upside in those markets. And keep a close eye on currencies. And I think precious is where you need to be.
But in gold, if you map the last 10 years, right, the returns have been subpar, especially in a market like India. It's been barely 7-8%.
Sure.
Do you think things could change?
Yeah, I do. I think that they'll test those highs, and I feel as though 24, with high bond yields and a dollar raging, I won't be surprised to see risk possibly come off the table a little bit, and the flight to safety in gold will be it.
Peter, you made a point about the ratio. What is it normally and what is it right now between gold and silver?
Well, you're running it around about 1,800 or 1,850 for gold and $22 or so for silver. So quickly do the math. You're probably running close to around about 85, 86. I'm just doing that in my head now, but it's traditionally far lower. Okay. So that ratio. So I feel as though that sweep up. You also got the industrial demand, and under, as far as from a mining perspective, silver is really a very hot commodity. So I think there's plenty of time for uptick for silver as well.
Peter, you've seen the 2006 to 2007-8 period closely as well. And, it feels in some ways pretty similar. I mean, we had a 450 basis point rate hiking cycle by the Fed back then.
Sure.
It's pretty close this time around. I think 475 basis points this time as well. We're about a year and a half into this tightening cycle.
Correct.
And we're all kind of very assured that there is no big growth slowdown coming, things are okay. Maybe it's just a lag, and maybe things will start to happen very fast on the downside in terms of growth.
Yes.
So
I'm following your theory, yes.
So, I mean, then commodities, that Christmas forecast, I mean, does that really hold? Or you think that's only the story of next year, maybe?
Well, I feel as though that'll be a build into next year. We're 3 months out from Christmas, so I feel as though that will be a storyline that'll start to shape so many different moving parts. You've got the Russia and Saudi situation. You've got, as far as growth forecast moving forward, trimming back. The World Bank was looking at China from 4.8 to 4.4%. So 24 is going to be a slower year from a growth perspective. I still think India is booming. You've only got to see it out here as far as construction and what's happening. So there are different parts of the global economy are under different headwinds, and I feel as though there's some parts of Asia that are really struggling.
Okay, well, we'll let you go on that note. Have a great weekend and
Thank you.
Enjoy your match. You're watching it in Dubai, you said?
Yes, I will be.
Okay, have a good
luck,
time.
India.
Yeah. Good luck to you guys
Good
as
luck
well. It's
to
going
you
to be
guys as well.
it's going to be a treat for viewers.
It certainly will be. It'll be an electric game.
It will. It'll be fun, and may the best man win, as they say. All right,
Thank
thanks
you.
a lot for joining in. Well, let's move on. We have a market to trade as well. Mitesh Thakkar and Shrikant Chauhan of Kotak Securities join in now. Gentlemen, morning to both of you. Mitesh, let me start with you. This is a market that has been very resilient at 19,500. You think that's going to be the case through the course of today as well? And what are the stocks that you're looking at?
So, one, I think, the market is resilient because I think, we've seen some kind of oversold kind of play come into the index yesterday. We've been falling for about a few days now, and closer to about 19,250, there's a good support. So we've kind of tried to make a reversal, but I think, it'll need more strength to show that the downtrend and the correction is over. The levels which I would look on the upside would be 19,615, which is where the intraday, the hourly chart averages, moving averages are placed. And 19,720, 725, which is an important pivot. I think only above that level of 19,725 will I be comfortable to take fresh long position and look for a situation when the markets will make higher highs and higher lows. The bank nifty in this entire equation, one, it's been underperforming, and now it's sitting at very critical, weekly support levels of 43,800, which is what we got as the low for the week. I think if it starts breaking below that, then I think this entire reversal will get immediately sold into. So keep a close watch on the bank nifty, or wait for the nifty to get past 19,725.
Okay, got that. Shrikant, we'll come back to you for trades, but sorry, Mitesh. Shrikant, good morning. How are you looking at things, and what's the setup?
Good morning, Prashant. Yeah, I think ahead of the
frozen. We'll just have that fix, and we'll go back to Srikanth. But Mitesh, why don't you run us through, individual trades?
Yeah. So I have a mix of buy and sell calls, Prashant, today. Good morning. On the buying side is Balkrishna Industries. Yesterday, I think towards the close, the stock moved up to a fresh swing high. It should see continuation. That's a buy with a stop at 25.50 for targets of 26.60. And a buy on Indian hotels, where I would recommend a stop at 411.5 for a first target of 430. I also have a buy call on Sun TV. It's been a stock which I've been recommending earlier as well. Now can be bought afresh with a stop at 621 for a target of 660, and one sell call. Marico, I think, had a big breakdown yesterday with negative indicator setup, suggesting more pressure. So sell here with a stop at 551.5 for a target of 520.
All right, let's do one thing. Let's take a short break. On the other side of the break, we'll come back with the pre-opening rates. We have some stock picks from Srikanth Chauhan as well. Also, Abneesh Roy of Nuvama will be joining in to talk about the Q2 business updates from the FMCG sector. Stay tuned. All right, let's get that chat going with Srikanth Chauhan. He's still with us. We couldn't hear him earlier, but hopefully we can now. Srikanth, tell us about your view on the index, and also while you're at it, if you can tell us what the individual stock ideas are.
Yeah, good morning, Sonia. Good morning, Prashant, Nigel. I think the markets, we feel that going to remain in a range ahead of the monthly payroll numbers, which are going to come in the evening. So I think that will keep the market in a range and cautious at higher levels. So we need to be more stock specific. Yes, but for index, in case if there is any correction, then close to 19,500, 450, the market is having excellent support. We are not expecting market to fall below the same, so on immediate basis. On the high side, 19,600, 650 is the area where we should look for reducing some long positions. And if we go through with these stock specific ideas, then in that we like Sun TV, which is around 634, 635. After a period of nearly 4 years, the stock has broken its resistance level. So the next level to watch out for would be 670, 690. It's a buy at current levels with a stop loss at 615. And the other stock which we like is from the mid-cap IT, and that is Persistent System. It is also indicating us that it is heading higher towards the levels of at least close to 5,900, 6,000. It's a buy at current levels around 5750 with a stop loss at 5650.
Okay, all right. Thanks a lot for that, Srikanth. Well, let's focus on the FMCG space for now. Quite a few FMCG companies have come out with their Q2 business updates. Abneesh Roy, the Executive Director at Nuvama Institutional Equities, joins us on the show. Hi, Abneesh. Thanks so much for joining in this morning. Well, out of all the updates that have come out, what stood out for you in terms of a positive as well as a not so positive update?
Sure, thanks. So we have had a few updates which have already come. Few are still awaited, Dabur, Titan, etc. We are still waiting. But based on the positive updates, clearly Avenue Supermart was positive. Nykaa, which has come yesterday on the fashion side, 30% plus kind of a growth Nykaa has delivered. That's positive. On the beauty also, 20% growth is in line with our expectation. If I see FMCG, Brokerage consumer with around 22% EBITDA growth, 5% volume growth, 5% consolidated sales growth. Indonesia, 10% kind of constant currency. I would say that that's in line with our expectation, but it will be close to the top tier in the FMCG results when eventually we'll have the results. Marico was bit muted and weak in a lot of the parameters, although EBITDA and PAT growth for Marico was decent. Double-digit 10-11% EBITDA growth because of the copra being soft. But in terms of volume growth, it was soft in most of the India businesses in terms of the Saffola, in terms of the Parachute and Vaho also. But yes, the youth portfolio and the foods portfolio for Marico did well. So Marico, I'll say, was below expectation, but that's also because regional players have come back in the coconut oil and in the edible oil also because of the sharp deflation in the raw material. We are seeing that impact. Second is because of the El Nino impact, clearly now rural demand has turned worse. August month, we had earlier also highlighted that 36% deficit was there. That has led to rural sentiments turning weak in August. And September month, the festival demand got shifted. That should come back in Q3. So overall, positive on the results aspect. Avenue Supermart, Nykaa, Brokerage consumer from a profit growth at least, and volume growth of 5% is not bad given the El Nino impact and the very uncertain and very volatile rains. So these would be the key takeaways from the updates till now.
You think for Nykaa, Abneesh, the worst is over as far as the stock performance is concerned? In the last 6 months, the stock has gained about 12% from the lows of 100 rupees. Now it's almost at 140 or so. Given that the numbers are good this time, the outlook from the management is positive, you think the worst is over, and what kind of an upside do you see on the stock?
Absolutely. I think this is a good performance. We have seen that a lot of the e-commerce companies are now focusing on the profitability. Nykaa is a very strong platform. It went through its own pain, especially in the fashion part of the business, but with a 20% growth in the BPC and 30% plus growth in fashion, I think it's a good performance. So yes, the stock should re-rate from here from the near-term, medium-term perspective. But ultimately, it will also depend upon margins. It will also depend upon how the Q3 pans out. But yes, I would say that now, in terms of competitive intensity, we are seeing a bit more rational behavior. But we would need to see what Reliance is doing in terms of the beauty business and what Tatas are also doing. Both are very serious players in the long term. But yes, from a near-term, medium-term, I think Nykaa stock should re-rate from here, given the good update which has come out. Margins remains a monitor.
Okay, margin remains a monitorable, but otherwise you like that. Got it. Any of the companies, there are a couple of these names like Marico, Godrej Consumers, etc. I know we discussed it, but they've also talked about a slowdown in consumer spending, right? And the consumption patterns on the whole. Do you think some of these stocks could move to the back burner compared to their peers? Just trying to understand which are the stocks where you're underweight on now?
Yeah, so if you see once the results come out, because we have had business updates from a few companies, we'll be overweight on Nestle, Tata Consumer. We also like Colgate, Brokerage Consumer and Dabur. So these 4-5 companies will be overweight from a results perspective and from a near-term perspective. In terms of the slightly weaker performance, we'll see Bajaj Consumer. We discussed Imami. Those will be on the weaker side. Even Britannia, the results will be weak given very high base and local players have come in biscuits, and margins are also now normalizing in terms of the base. So those will be at the bottom tier from a Q2 results. In terms of the middling performance, I will say HUL, Dabur, etc. Those will be in terms of the middling performance. United Spirits also, there will be compression in margins quarter on quarter. ENA has gone up. Plus, because of the Adhik Maas and Karnataka price hike, volume growth in United Spirits in Q2 will be weaker versus the Q1. But still, I think Q3, there should be revival. Plus, the UK FTA trade agreement, I think that's a key monitorable. That will be positive for United Spirits. So that's how we should play the sector.
Okay, all right. Abneesh, I wanted to ask you about this pizza versus burger argument. And we're getting into a World Cup as well. And we know a couple of days ago, Jubilant, they offered some kind of, offers, price cuts as well. What's your view on Jubilant Foodworks in particular? Given all this in terms of a backdrop, it's a solid brand though. It used to be a favorite as well. At these prices, what is your view?
So 3 things. One, of course, Q2 results will be weak for all QSR. It is still tough times. The base becomes favorable from Q3. So that's a good development that in Q3, the results, etc., the base comparables become a bit more helpful. Yes, you are absolutely right. Cricket and pizza are having much higher relation to each other versus a pizza versus a burger. Pizza travels much more in terms of the delivery format. So I would say that yes, Domino's should benefit more. And that's why Domino's has been a bit more proactive in terms of the promotions. We have seen the news flow. It is not a price cut throughout. So yes, I would say that even the third aspect is the milk prices. Milk prices are cooling off from the peak, and that benefits Domino's more than the burger chain. So yes, from a near-term perspective, it will be Jubilant Foods which should benefit in the Q3. Having said that, when I combine valuation, when I combine the expansion, I think Sapphire Foods stands out from a one-year perspective. But yes, from a cricket, Jubilant Foods should benefit more.
All right, thanks a lot for joining in. Appreciate your thoughts, Abneesh. That's Nuvama Institutional Equities with their view. Let's move on now. The market, the pre-opening rates have settled in. A couple of these stocks like Tata Motors, Nykaa, Kalyan Jewellers are all trending in the green on the back of decent business updates coming through. We have Mitesh Thakkar who's back with us. Mitesh, what is the big call at 9:10?
I'll go with a buy on Sun TV. Keep a stop at 621 and a target of 660 can be looked at.
Sorry, I didn't hear that stock. Which one is it? Sun TV?
Sun TV, that's right.
Okay, all right. Thanks a lot for that. Well, Nimesh is with us to tell us about the standout brokerage report of the day. Nimesh, what are you looking at?
Hi, Sonia. So today's standout is on metal names. Interesting report from Macquarie. They've raised the target price and earning estimates for most of the metal stocks today. In fact, the steel stocks. Now, the key rationale is they believe that the global commodity upcycle is not the base case for them as far as the CY24 outlook is concerned. Now, they believe that the steel companies should benefit from strong domestic demand as well as strong domestic prices as well. So the preference is ferrous stocks versus the non-ferrous stocks. Now, coming to the individual names, they have an outperform rating on Tata Steel, but they've raised the target price on Tata Steel to 151 versus 120 earlier. They've upgraded JSPL to outperform now from neutral, and on JSPL they've raised the target price to 808 versus 557. On JSW Steel, they've upgraded the stock to neutral from underperform, and there they've raised the target price sharply to 841 versus the earlier target price of 641. Now, while on valuations, the steel stocks are trading between 0.7 to 1.7 times FY24 price to book, but they believe that given the earnings profile, this kind of elevated valuations are justified. So, on the back of that, a big upgrade on steel names. They've not only raised the target price, but they've raised the earning estimate as well for most of the steel stocks.
All right, Nimesh, thanks very much for that. So that's steel in focus. But what's today's momentumizer stock? Rima is here with exactly that. Rima, hi, morning.
Thanks so much for that. So the stock which is on my radar today is KCP Limited, because yesterday it saw unusually high volumes and very strong price action. The stock closed with a gain of 9%. Volumes were about 6 to 7 times the kind of volumes we typically see. Yesterday, 48 lakh shares traded on the bourses, which compares with the 10-day average volumes of about 7 to 7.5 lakh shares. With the up move, the stock also crossed its 50-day moving average of 117.8, and now the stock is at 130, very close to its 52-week high of 138 that it hit on 7th of November 2022. So after a good 11 months, the stock is once again inching back to its 52-week highs. In fact, from March, the stock has had a pretty decent run. Year to date, there are no gains to boast about, but from the March lows, which were 52-week lows, the stock has rallied close to about 40%.
All right, Rima, thanks a lot for that. Well, two stocks that I'm watching this morning. One of them is Indigo. Let's just get the chart up for you. ATF prices have been surging, aviation turbine fuel prices. So what the company has done is introduced a fuel charge. So now, based on the distance that you travel, you'll have to pay an extra fuel charge. The maximum fuel charge on the ticket would be about 1,000 rupees, up to 1,000 rupees to offset the rising ATF prices, which is, of course, not that great for consumers, but very good for Interglobe Aviation. They'll be able to, pass on the rising ATF prices. This begins on October 6th, which is today. So from today onwards, there'll be a fuel charge on both domestic and international routes. Remember, ATF prices were hiked by 5% in October, and that was the fourth straight month of hike in prices. The other stock I'm looking at is Tata Motors. It's trending in the green as we speak because of very strong wholesale and retail numbers that the company posted in their Jaguar Land Rover business in Q2. Retail sales went up 21%, wholesale sales went up almost 30%. The guidance for free cash flow is quite good at around £300 million. The order book remains strong at 168,000 units. Morgan Stanley has an overweight on the stock with a target price of 711. And the other thing is Tata Technologies IPO is in focus. They came out with an update where they said that they have reserved 10% for the existing shareholders of Tata Motors. Remember, Tata Technologies is one of the largest global engineering services company, so the IPO is in focus as well. In fact, I wanted Mitesh's view on this. Mitesh, Tata Motors at 620, how do the charts look?
Tata Motors, if you look at the last few weeks, Sonia, it's been doing a range of about 645 to roughly about 600. And we still, are believing that this range will hold out because there's no expansion signal. So for the timing, I'll keep that as a range. But whenever it starts getting past 645, I think the next leg of upmove could begin. It's been about 4.5, 5 weeks of consolidation already. So it should happen sometime soon. But I would still want to see the price get past 645 and then take a trade on the downside.
Okay, all right. Mitesh, just to revise, the pre-open rate is suggesting the Nifty opens 75 points higher. Now, if that is the case, we open above the 50 DMA. What would your view be on the index itself? What are the levels, just to revise?
Yeah, Nigel, as I maintained, I think till we start getting past 19,725, I won't be comfortable taking a long position on the index. So I think I'll want to maybe attempt a small short around this 19,670 zones with a 50-60 point kind of a stop loss. But then if we start getting past 19,725, then I'll have to revise my position, get out of short position and try and explore long side.
Okay, all right. So a possible short position at 19,670, but 19,725 is the crucial level that Mitesh is looking at. If we get past that, well, he'll feel a little bit more comfortable. Keep an eye out on the Nifty Bank as well. In the pre-open, Sonia, it's indicating that we open up with a gain of close to around 0.4%. Sometimes these gap ups make it a little bit more tricky, but for the time being at least, the Nifty crosses that 19,620 mark that we were eyeing earlier today.
Absolutely. And you have the event upon us, right? There's the RBI policy. Although there is no expectation of a move on rates, there could be a hawkish tone from the Reserve Bank governor, a hawkish pause as we are calling it. That is the expectation. And the commentary on both inflation as well as growth is something that will be keenly watched. Then there is the US jobs report later in the day. So people may not want to take any aggressive positions ahead of the weekend and these two big events that are upon us. We have just 45 minutes left for the RBI policy, so we'll not have to wait too long. Yesterday was a good session, so perhaps we can build on to our gains today. Time will tell. But watch out for names like L&T, ICICI Bank, Infosys. These were heavyweights that batted for the bulls yesterday. And perhaps there could be some more follow-on buying this morning as well. The other good part is that oil prices continue to be subdued. So that is big benefit for names like Asian Paints. You had big moves in JK Tires, Apollo Tires, aviation companies. Aviation companies in any case are now passing on higher ATF prices as well. So these are some pockets that you can perhaps look at as we get into trade this morning. But there you have it, the first tick on the opening bell right in front of you. And not bad at all, 60 points higher on the Nifty. The mid-cap index is up 180 odd points. It's a good start to trade. There is momentum. You can see it in the broader markets. Mid-cap index up about 0.5%. And Nifty now back at that 19,600 mark. Let's take it straight to the gainers. And pull up, the top gainer for you on the list is Bajaj Auto. So auto stocks are doing well. Bajaj Auto, Tata Motors, Hero MotoCorp, M&M, all in the green right now. Then you have metal names. Hindalco, JSW Steel are your top gainers. Bajaj Finserv, Sun Pharma, Titan, Cipla, Maruti are a couple of other stocks that are topping the charts this morning. What's dragging its feet is FMCG. HUL, Britannia are a tad bit in the red. Kotak Mahindra Bank, Bharti Airtel are just about subdued, flat. And HDFC Life, sort of a bit comatose over there, absolutely flat for the morning. But otherwise, for the market, it is a decent opening. The important bit is whether we build on to our gains. And I reckon that could take place only after the big event is, out of the way, which is the RBI policy. But for now, decent opening.
Well, that's right. Sonia, a couple of quarter two numbers that we got, that's the updates that we got for the past quarter, and they're looking quite good. Ujjivan Small Finance Bank, you had the total deposits that were up close to around 43%. CASA was up 27%. The street has taken that positively, so Ujjivan Small Finance Bank is higher. Kalyan Jewellers as well, the quarter two India operations revenue growth was more than 30%, so that's another stock that's opened up well in the green. Here's Som Distilleries. They've launched a QIP at a price that's at a discount in comparison to yesterday's close price. So that's why that stock has opened up with a cut of around 2.5% or thereabouts. A few more names should come up for you on the screen. You have Adani Wilmar, the quarter two overall sales value. Well, it declined year on year, though you had volume growth in double digits. So Adani Wilmar comes up for you on the screen, opening up with a gain of around 1%. Angel One, the quarter two gross client acquisition was up close to around 60%. Client base as well was up close to around 13% odd. The street was anticipating a stronger set of numbers, so that one is opened up more or less flattish. And PB Fintech, well, sources indicate to us that SoftBank could have sold in the trade that we saw a few minutes ago, worth more than 800 crores odd. Stock opened up in the red, but that's recovered a goodish bit, moving towards the green line. What else, Prashant?
Okay, above 19,600 right now, so that's looking good. 60 points on the index. Just a few more names before we introduce our market master. Jindal Steel, Nimesh was just telling us about this Macquarie note on metals. So JSPL is coming up with about a 2.5% gain. And by the way, volumes are looking strong as well. Kalyan Jewellers is up 3.5%. So 242 on Kalyan Jewellers. It's got volumes on it. EMS Limited, the recent listing, that's been doing very well. 4% this morning as well, 317 on EMS. Sobha is up 2%. These real estate companies, Sobha, Puravankara, Prestige, last couple of days, they've all rallied quite a bit. Sobha, of course, had a bit of a fall as well recently. Supreme Industries, sold off under 4,000 bucks. It's back up a little bit, 2.5 higher, 39.53. I think the recent high was almost 4,500, if not a little higher. There's Ujjivan Limited, which is up about 2.6, 2.7% as well. Small Finance Bank, the SFB is higher as well. Mirza International, 3% up. I mean, so if you go down, then you're kind of looking at lower volume traded names, really, which are coming up. On the downside, IOB is the one which is seeing some 1.5% cut, but nothing large, really. Suzlon sort of gained 10% in the last two sessions, almost to 30 rupees. It's starting 1% down, but nothing large. Zomato had a 6% move yesterday. That is starting about 0.5% lower, but it's got volumes on it. Angel One had a 6% rally. And of course, we got the second quarter update post-market hours. Stocks down about 1%. So these are essentially small reversals off of what happened recently. Union Bank is another one which is down almost 1%. UCO Bank. So this entire PSU bank space, I think, is seeing some more pressure. Central Bank, UCO, Union Bank, etc. Avenue Supermarts had a pretty decent day, 3.5% yesterday. That is pulling back about 1.33%. And then there is Idea, which is down about 1.5% as well at this point. Maybe look at MRPL as well, which is down 2%. So stocks at about 96. That's a 2% cut on MRPL on the back of volumes. There are more PSU banks. Bank of India is another one, which is down about 0.5%. So it's a, sort of focused kind of start on the downside for public sector banks. But, overall, if you look at the market breadth, although it's too early, bulls have the advantage. One other name which has now popped up is Indigo on the upside. Indigo has got a full 2.5% gain and it's got massive volumes for this point in the day. That's Interglobe, that fuel surcharge coming through. Interglobe doing everything it can to protect its margins by imposing that fuel surcharge. So that's what's coming through. I mentioned Kalyan Jewelers. Keep an eye out on that one. It's got some momentum. It was up 2.5%. It's up 5.5% now. So there is some more in terms of gains coming through on Kalyan Jewelers. Sandeep Bhatia is with us, Head of Equity India and Country Head India at Macquarie Group. Sandeep, good to have you with us here. Thank you very much for your time. A bit of a confusing time, especially if you kind of connect what's happening to global macros, right? Bond yields and the consequent damage that could inflict. Do you think this is a bit of a tactical move we've seen on the upside? I mean, yields, not bond prices, but the rally in yields and this pullback over the last 2 days. Where does the Macquarie Group, I mean, your sort of strategists, etc., come in? What's going on?
Yeah, I agree. Market has been all over the place. Yields coming off a bit. The message from the Fed when they last spoke was it's going to be data dependent. Data has not worsened, but it's not improved in terms of significant slowdown in the economy, which is would be considered an improvement that the economy is actually slowing down. So I think the Fed on the margin will still be looking at data. The Fed rate meeting is on the 1st of September. The market is currently betting that there are no further rises. But I think this changes every week. So we will go closer to this and take a decision. But I don't think the Fed increase cycle has completely gone away. Even if it doesn't happen on 1st September, it can happen in the first quarter of next year. So we'll wait. As far as India is concerned, I think we will currently hold rates. We want to increase rates. So the strength in India should broadly continue. But the overall market strength will depend on if there's any significant changes in the Fed. And if the Fed continues to raise rate, it will put pressure on all markets, including India.
Oh, okay, all right. But, we have a lot of big events that are upon us over the next 6 to 12 months, right? There is the elections here in India. There's the elections in the US. Then, of course, the rates are rising across the system. given all of this, do you reckon that the market could take a pause, take a breather before, you know, the next leg up? I mean, are we looking at some sort of a time correction, if not a price correction in the market?
Well, I think time correction is definitely the least that the market will see. There could also be price corrections. There are state elections, as we all know, before the final general elections, and state elections may not entirely be in favor of BJP. So to that extent, there would be some headwinds in terms of politics, which BJP may face. So there could be even a price correction. So I wouldn't rule out both a time and a price correction. As I said, the best case outcome would be a time correction.
If you ever see a price correction, Sandeep, what do you think? I mean, I recall when we spoke earlier this year as well, you said the markets are not very, very cheap. And, you know, if it dips, then you could be a buyer. But at current reckoning, well, we're still at 19,500, just 3% away from the recent highs. Not a buyer? Do you see much further downside from
Yes. Yes. So, yeah, I think the markets clearly have been much stronger than anyone anticipated. Earnings have been in line. I don't think earnings have been significantly superior or beaten expectations. It's another thing that our expectations are always very high, and therefore even to match expectations historically has been a challenge for the markets. But currently, I don't see that we are going to get any big positive surprises in terms of earnings. Therefore, the market's corrections would be in the mid-cap, small cap sectors where there's been so much strength, and this is where the biggest risks lie. The large cap will continue to maintain. So the headline indices could remain unchanged, but there could be correction within them in the market.
You know, we're starting the second quarter earnings season. One space which has been struggling in that sense has been the sort of consumption space, right? You look at volume growth numbers for most of these companies, especially staples, etc., but not just staples, even durables, flat to actually negative. Do you think, but this is a festive season, there's the World Cup, etc. You think things will look materially different and some interest may come back in that space?
So, you know, if I am a sales trader, I will say that the World Cup is a big event, but World Cup will be a maximum of two-month impact, right? 6 to 8 week impact. If you're looking at buying a stock, you probably want to look at earnings which is beyond the 6 to 8 month window. So yes, the festival season is on us, which is lasting a quarter from October to December, and the underlying strength of the economy, therefore, is a bigger factor than a World Cup or a quarterly performance. On that consumption front, I think we will still be moderate. So I wouldn't be, I wouldn't getting overweight on the consumer sector. The strength lies in maybe more secular sectors such as the large cap private banks.
Okay, that was actually my next question. Where do you see the strength in this market? Where can you generate alpha or see outperformance? In the large cap private sector banks, I mean, it is sort of an overcrowded trade as well, right? Don't you think? And if not, what kind of potential do you see over the next 6 to 12 months?
True. Completely agree that it's an overcrowded trade. We've been saying that this for some time, that these are solid earnings and best ever balance sheet kind of environment that the private banks are operating in. But the whole market is an overcrowded trade. So either you step off this market or you continue to be in the safer parts of this entire market, which is the private sector banks. Other than that, if you want to take a short-term kind of trade, then probably in the cyclical sector, actually we are seeing signs of some improvement in the Chinese economy. So to some extent, in a 3 to 6 month horizon, you could actually see some of the ferrous metals perform. So we like Tata Steel. So these are parts which you can generate alpha in. But the reality is that this is an expensive market, and there could be bouts of corrections, and price correction therefore would be a safer point to enter the market.
Sandeep, you know, there have been a couple of these themes that have worked out very, very well, whether you're looking at railways or defense. Do you think some of them have really run way ahead of themselves? Because as of current reckoning, well, they look good, the stories look good,
But the earnings that people are looking at are not even FY25, it's like 26, 27. Your take particularly on both these two spaces, which have done very, very well.
So India definitely needs to scale up its capabilities, capacities, technology, the size of the firms, the quality and the quantum of both its transportation, railway transportation, also its defense sector. All these are decade stories, and these kind of earnings that the sizes of these firms currently are actually subpar, as we all know. And therefore, it's easy to ramp up these stocks when the theme has just started. So we are in the initial phase. If you talk to the bulls will tell you that, as I just said, this is a decade story. So don't look at valuations in the next 2 years. Look at what India can do in the next 10 years. And if you're a skeptic, you will say that this market has to correct, and this is an overcrowded and and a space in which everyone is looking in one direction. Therefore, this will fall the most. My 2 bits on this: we will see a correction. There would be some headwinds, both primarily, I think, on some of the politics which will happen around the state elections, and a market correction there would be a good time to enter the large cap sectors. As far as the broader direction of the market is concerned, it will actually settle only once we know where the US is headed. The US and the dollar have been remarkably strong. Everyone expected a recession by the second quarter. The recession has not happened. If the recession doesn't happen and the US actually has a soft landing, to that extent, India and India's exports and India's macro will actually do much better. So the best case outcome for the US is what is currently being priced in by the market, that there are no further rate rises in the US. The US has a soft landing, and and India can continue to grow at a very strong pace. So we will soon know this. I think at least by the next general elections, by March, April, these things will be clear.
Okay, I wanted your thoughts on one sector that is seeing some signs of a slowdown, right? The FMCG space. So if you look at the business updates from, say, a Brokerage Consumer or even a Marico, they are talking about growth in low single digits, talking about a slowdown in consumption. Is that just, transient according to you, or is it some sort of a structural slowdown that we're looking at?
I think this is a slowdown which has been there for this year. Markets try to wish it away, but it continues to come every quarter in terms of the commentary which comes from companies. I would think that at least for the next six months, at least till June, July next year, the consumer sector will be an underperform.
All right, we will let you go on that note. Thanks a lot for joining in. Sandeep, have a great weekend, and we hope to speak with you again very soon. That's the Macquarie Group talking about their view on the market. They say at worst, the market will go through a time-wise correction. So there's nothing really to worry. This is a structural growth story that India is looking at, and we could pile on some more weight over the course of the next many months. By the way, it's not a bad-looking market at all. The sensex is now up over 200 points. Nifty has been gaining ground as well, holding on to 19,600. Let's take it straight to our first corporate of the day. Nazara Technologies is on our radar today. The company recently, if you remember, did a fundraising of over 500 crores from SBI Mutual Funds and Zerodha co-founder Nikhil Kamath. Nitish Mittersain, who is a joint MD and CEO at Nazara Technologies, joins us now to discuss an outlook on the business. Nitish, thanks a lot for joining in. Appreciate your thoughts here on the channel. I just want to start by asking you about what your cash balance is now post the fundraising, and how do you plan to utilize the proceeds?
Sure. So at the Nazara level, we'll have about, I think, about 750 to 800 crores of cash, plus a subsidiary approximately an additional 400 to 500 crores of cash. So cumulatively, I think we would have about 12 to 1300 crores of cash on our balance sheet.
Okay, 12 to 1300 crores of cash. And how do you plan to utilize that? If you can give us, the strategy over the next 12 months?
Yeah, sure. For Nazara, I think the strategy is very clear. There are two ways we're going to deploy this cash. First, of course, in our waterfall is, deploying the cash for organic growth of our existing businesses. And wherever we can push the business forward, we will aggressively do that. And the second, as you know, is we are always been very acquisitive. Our acquire and scale business model and playbook has worked very well for us. And at this point of time, we see a lot of opportunities, value opportunities, where we believe we can acquire businesses and significantly scale them both in terms of their revenue, margins, and profitability. So I think both these things are what the cash will get used for.
Hi, Nitish. Good morning. Give us a sneak peek at least. Should we hear something in terms of an inorganic growth in the coming quarter? Because you're sitting on a large sum of cash. And what could the acquisition target be? Will it be a couple of 100 crores? Will it be larger than that?
Over the last year, my team has worked on a very strong deal pipeline, if I want to call it that. And we've looked at a lot of game developers. Core gaming IPs is something we're very excited about. The acquisition we had done last year on Animal Jam, company we bought called Wildworks, has turned out pretty well for us. So that playbook is kind of taking shape, and we think we can replicate that playbook at a larger scale. So yeah, I think for us, we're looking at opportunities where companies are having revenues of at least, I would say, in the 100 crore ballpark range at a minimum level, and north of that. So we'd like to do transactions that can kind of move the needle a bit for us. And also, we really believe that we can add a lot of tangible value to the business.
So in the coming quarter, should we hear? In this calendar year?
I am hopeful of that.
Oh, interesting. All right, just one more point. You've raised close to around 500 crores, but I think you had an approval for around 750 crores. So
Yes.
will you go the distance then? Will you go ahead and raise the remaining money as well, 200 odd crores, or are you done with the fundraising?
I think the shareholder approval we had was valid for a year. So I think we will potentially raise the balance at an appropriate time, but I don't expect to do that immediately.
Okay. All right. Nitish, hi, good morning. Let's just actually move on to another thing, which I think has been an industry-wide issue, not just you. You have a real money gaming business, right? Which is about 5% of your sort of total. Yes. Now, companies like Delta have been issued GST notices. Could you tell us if you've also sort of received one?
We did, so two things. Our open play business is, in the Q1 of FY24, it was about 4.5% of revenue and actually contributed less than 1% of our EBITDA. So it's not a very large business for us, and therefore, any impact on that business is relatively less material for our overall financial performance. In terms of the GST notice, we did intimate one notice that we had received for 2.83 crores, but that was unrelated to the current issue that is ongoing in the industry.
Okay. What's but your business is pretty much like what Delta offers, right? I mean, in terms of how the business is.
Yes, the real money gaming business, skill-based, what is called skill-based real money gaming. Delta predominantly runs a poker business. Our business is called Classic Rummy. And from October 1st, the new GST applicability has come in place, and we've kind of complied with that. So that's the current of the business. We believe that, while that business will take a short-term hit in terms of profitability, I think with improving regulatory clarity and taxation clarity. If you remember, we've spoken many times, and I've often said that for us at Nazara, what is very important is to operate in a framework that is clear. And I think that is being achieved. So we are actually looking at this particular segment of our business with, I would say, a glass half full rather than half empty kind of perspective.
Now, will you invest behind this business now? I mean, your sort of thought process remains the same?
Yes, I
think. Yeah.
No, I think we will look at more aggressive investments going forward in this segment. We have, of course, got to wait for some of the dust to settle before we start doing that.
And what would an acquisition, etc., which you were referring to earlier, be in this segment? Or do you think that's stretching it?
I think it's a bit early I think the dust needs to settle in this segment. Yeah. Everything's taking place. Some of the business models are getting reset based on the new taxation. So probably in a couple of quarters would be the right time for us to take a more, tangible position on it.
How has business been in Q2 for you so far? I'm trying to understand whether the World Cup, has any... I mean, do you have any kind of monetizable potential from this World Cup? Any IPs around it at all? And in general, how has business been?
Sure. As you know, we're in the silent period, so I won't be able to comment specifically on our Q2 numbers. But with specific to World Cup, there are two businesses or products of ours that get positively impacted. One is the sportskeeda business, because that's a sports content destination. Obviously, you have a peak in traffic and user interest during the World Cup in terms of cricket. So that should see some benefit. And we also have the World Cricket Championship or WCC game, which is the most popular cricket game in India. And again, we see during such cricket season, the performance and the user base and the interest seems to peak.
So for the gaming business overall, right? I mean, is this I know you're in the silent period, but is this a run rate that you can sustain? Gaming grew almost 25% in the quarter gone by. Esports was a little more muted, but you had spoken about how that was because some of the IPs got deferred. So on a sustainable basis, what kind of growth rates are we looking at?
I think the opportunity for gaming in India and gaming from India for the world, right, is immense. And I think India is going to emerge in the coming years as a gaming nation of the world. So I think we're only scratching the surface, and the runway for growth is, in my view, at least for an Indian company, unlimited in the near future.
But can you put a number to that? I mean, what are we looking at? 25%, 30%, or just in the very near term? I mean, of course, medium to longer term, it's a far larger story. But in the near term, is this 25, 30% growth rate something that you can sustain through FY 24-25?
Yes, I think so.
Okay, all right. So say in the next, next 3 years or so, the revenue should be double.
Yes. Yeah, I think if you do not do that, we would have underperformed significantly.
Yeah, going by your track record, you should definitely be there.
So me and my team are very aggressively pushing towards that growth or better.
Okay, just one last question. Back to that the GST and real money gaming business. You said that one notice you told exchanges about was for another issue. Can you tell us with this specific, with what the notice that Delta has received, are you expecting, a notice? Have you heard anything at all?
I mean,
because
we haven't.
The business is the same. Yeah.
Yes. We haven't received any notice at this point of time. And if we do, we will surely intimate the exchanges when we do.
Okay. All right. We'll leave it there. Thank you very much, Nitish, for joining us. Great speaking with you. And it's a pleasure having you with us here on CNBC-TV18. Good luck with your plans and growth as you're outlining. So aggressive on the growth front, looking for acquisitions, and they've got a war chest now to be able to do that. 873 on Nazara. The market, by the way, is looking up about 56 odd points, so things are very, very steady. And you, by the way, have more and more names, right? Newer names, actually, I should say. Paytm is now top of the list in terms of volume-led gains. It will come up on your screen, 3.5% gain there. There is J&K Bank, which is up about 3% or so. A name like Shakti Pumps should come up. It never comes up at this point right at the top, but it's a number 3 volume-led gainer. What a performer Shakti Pumps has been this year. 945, huge volumes, by the way. Kalyan Jewelers, of course, we highlighted. Look at PNB Gilts. Again, something new, right? 12% on PNB Gilts. Stocks at about, 86 on that one. So, big one. There is Yatharth, which is the hospital chain. 7% gain. These are large moves. EMS Limited, of course, we highlighted in the morning. There is KEC, which is up about 4.25%. JM Financial is up big time. There is HBL Power, which is up about 3.5% as well. So, yeah, so these are large names coming through on lots of these names. Now, metal stocks are buzzing, right? Macquarie is positive on the sector. Nimesh highlighted this before markets open, and I think stocks are taking note. Let's just revisit that with him. Nimesh, over to you.
Hi, Prashant. So, as rightly pointed out, Macquarie has put out a note on metal stocks. Largely, they've raised the estimates as well as target price for most of the steel stocks. Now, the key reason is they believe that the global commodity upcycle is not the base case for them as far as the CY24 estimated outlook is concerned. They believe that steel companies will benefit from not only from the steel demand, but from the strength in the steel prices as well. So, they prefer ferrous over non-ferrous stocks at this point in time. Now, in terms of individual stocks, they have an outperform rating on Tata Steel, but they've raised the target price to 151 versus 120 earlier. On JSPL, they've upgraded the stock to outperform now from neutral, and they've sharply raised the target price there to 808. Even in JSW Steel, they've upgraded the stock to neutral from underweight, and there they've raised the target price to 841. Now, in terms of valuations, while they're trading between 0.7 to 1.7 times on FY24 estimated price to book, which is at a premium to the long-term averages. But given that they estimate 12 to 19% ROE growth for FY25, they believe these premium valuations are justified. So on back of that, a big upgrade, not in estimates, but on target prices as well, across the steel names by Macquarie today.
Okay, thanks a lot for that, Nimesh. Shubhal, let's hop across to Mangalam. He's joining in to tell us about Kalyan Jewellers. Stock was buzzing in trade. Mangalam?
Yes, Nigel, it's been a big mover this year and it continues its up move, a fresh record high for that counter, and that's largely on account of a strong second quarter update coming in. The street was anticipating a weak number largely because of the Adhik Maas period, which is not particularly the best for buying jewellery. But in that as well, Kalyan Jewellers has shown 32% revenue growth in their India operations. In fact, their non-South markets recorded higher growth because they've increased their store footprint out there as well. Gross margins at the store level have been stable, though on a year-on-year basis, they have declined on a consolidated basis because higher share of revenue coming in from franchise stores itself, and that was anticipated. They added 13 new Kalyan showrooms across non-South markets, and ahead of Diwali, they will be unveiling 33 new showrooms, Kalyan, as well as Candere formats in India itself. The Middle East business, which accounts for about 14% of their overall revenue, saw a little subdued growth at around 4%, but that shouldn't worry because large part of their business from India is doing well, and so is their non-South market. The stock, which I said has been rallying in the past, has continued its march upward.
All right, thanks a lot for that. Well, Concord Biotech is the other one on our radar. Ekta is here to tell us more about that. Ekta, over to you.
Thanks for that. Well, yes, Jefferies has initiated with a buy and a target price of 1260 rupees. They believe it specializes in manufacturing of fermentation-based APIs, which have a high entry barrier due to the long development timelines. Its efficient manufacturing process has resulted in leadership positions in several products. Now, a wide portfolio and an adequate capacity should drive industry-leading growth, according to them, as well as operating leverage. They estimate a 30% profit CAGR over FY23 to FY26.
Okay, thanks a lot, Ekta, for that. So a lot of stocks in focus. Let's slip into a quick break, but I think the big focus will be on the Reserve Bank policy. We have a whole host of guests joining us. What can we expect from the RBI Governor's address later today? More on that coming up in just a bit. Stay tuned.